Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock, including news of an odd market reaction to news out of China. The keenly awaited HSBC flash China PMI came in late yesterday below expectations. It was negative, with its fourth decline in a row and an 8-month low, and at a faster rate of decrease. That's all bad. The Aussie dollar fell and then recovered and then made substantial gains in value. The Kiwi dollar showed little impact. Shanghai wholesale rates hardly moved. No one seemed to care. Why? Well, it seems this result makes it more likely China will announce more stimulus. Go figure. Perhaps markets should take more notice. China's rate of urbanisation is slowing, undermining a key plank for this and future years' growth targets. If both manufacturing and urbanisation keep slowing, it'll be much harder for the country to achieve this year's 7.5% growth target. However, all this justifies the recent weakness in the Yuan's exchange rate. Gold fell and has fallen rather sharply and is down to $1,310 an ounce. That is a spectacular 6% fall in a week. And then the American markets returned from their weekend break, reporting strong manufacturing expansion, although at a marginally slower rate. The Eurozone PMI was also out overnight and was stable and positive on the back of continuing good German results and surprisingly strong French results. A couple of emerging nations reviewed official rates recently. Vietnam surprised with a 0.5% cut, and Israel made no change. Oil prices treaded water overnight. Equities are lower in mid-afternoon trade in New York. The US Treasury 10-year benchmark yield is at 2.74%. New Zealand dollar has started an uneventful session overnight and starts today at 85.4 US cents, though it is down against the Aussie at 93.4 and the TWI is at 79.9. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.